the Fed has come out and done what everyone expected they would do, and that is raise interest rates for, I actually don't know how many times since they started, probably up to about 8, 9, I guess, something like that. 0.25%, and the market reacted as you would expect, question mark, question mark. I've got question marks on it anyway. I'd love to hear what Ash thinks about that, and we'll find that out very, very shortly, I'm sure. But to my mind, it's either A, given me an opportunity to get a good price about a few things, or I'm just going to miss out. Simple as that. And that will probably be the case with quite a few things that I'm looking at. I've got a few things up my sleeve at the moment that I'll share with you very soon. But before we do that, hi, Catherine. How are you doing? Good to have you on board. As I say, there's quite a few things I'm looking at and were from the beginning of the week, and I'm very, very keen to get in the market. Haven't been in the market pretty much all week, to be fair. That's primarily because I'm not in front of the charts too much on the smaller time frames, which I think is where the action has been. Not on the bigger time frames. There's been quite a few things I would like to have traded that were either A, at resistance, or B, weren't good reward to risk. Some of those have ticked the box and gone nuts, and others have been death traps. So interesting week so far. I have lost that little box that I need. There it is. All right, let's start, before we get into that, with the gold chart. And how you going? I don't know if you're following this. If you're following this newest or latest version of the what we call it London Open Trade, mixed this week. Monday was good. Tuesday was good. And Wednesday, yesterday, not so good. Would have been a loser yesterday because it broke to the high side. Sorry, broke to the low side. Or did it? I can't remember which one. I didn't trade it. So fortunate for me, because it would have been a loser. Ultimately, the Fed reaction is there, as you can clearly see. And since that reaction, we've gone into consolidation, as you might expect. It's either consolidation or reversal after a big emotive move like that. And that's the question that we've got today. Is that emotive move sustainable, or is it going to be a case of, okay, we now go to sleep for the next week, or we're going to have somewhat of a at least retracement, maybe even reversal? Got some thoughts on that. I'm on the wipeout team, and that means wiping out that reaction, coming back down to here at some stage. It may not happen, but I think I'm going to position myself that way. Righto, as far as gold's concerned today, we have a range from open of Asia session, which was that candle there, I believe. Must have been that one, 0200. That one there. Yep. Okay, so that's the low of the range right there, which I think equates to 150, the figure. That's why I've got my entry there. And the high of the range is the high of that bar, and that equates to 1960. So we've got a $10 range on gold. Hi, Paul P. Got a $10 range, and I like where price is at the moment, so we're going to trade long at 1960, and short at 1950. Whichever one's triggered, obviously, will cancel the other. Let me set that up. And as always, if you're here for the first time, I don't think anybody's here for the first time at the moment, but nice to see some familiar faces in the room and some not so regulars. Great to have you on board as always. Remember, this is in test mode, so it needs to be traded at a very, 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 very low risk. And that's exactly what I'm doing. I think this is like 50 cents in the dollar or something. Like, I can't remember exactly what that equates to. It depends, of course, on how wide the stop loss is. Okay, so we've got a buy order at 1960, which is there. We've got a stop loss at 1950. Could this be simpler today? No, it couldn't. Place. Okay. Stop loss there, entry there. Now we'll do exactly the reverse of that. And we'll buy at, oh, did we just buy? I think we did just buy, didn't we? We're going to sell this time. New order. Again, same amount, 0.03. And it's a sell stop at 1950. Now, that's even before I was born, right? 1950. And the stop loss is at 1960, which is after I was born. Getting the picture? I'm old, right? 1960 is the stop loss, yes. There we go. Right, now, I did get a question the other day about where do you take profit on this? Well, because it's in trial mode, what I'm actually doing is using first resistance or support level after, I can't say 1-to-1, but you don't want to take it at WR1, for instance, which would only be like 1/4-to-1. But daily pivot's obvious today. That's where I would get out of that. I'll just close it. That's it. Done. Nothing more. And I'd probably let it go to DR2. So they would be the targets today. So you'd want it to go long to get more money if it does trigger, obviously. WR2 would be a consideration, but it's still less than 1-to-1. So I'd like to get at least 1-to-1 out of it. If that's not the case, and we prove that that's not the case over time, then I'll change it. But at the moment, I want to go a little bit more than 1-to-1, and I want to go to the next resistance level or support level after 1-to-1. And I know daily pivot's just about 1-to-1, so all good. So that is the gold setup for today. Don't forget, one cancels the other. So if the short triggers, you cancel the long. If the long triggers, you cancel the short. Okie dokie. Let's now go and review a couple of things. But before we do that, I'll give you an order that I have in the market if you wanted to follow the progress of this. It's CAD yen. Now, CAD yen, as anybody who was in the room on Monday will know, is something that I'm stalking. The reason I'm doing that is primarily because of my three amigos here. So when I see that, the inverted version of the high side three amigos, of course, false break to the downside, false break to the downside, which is lower than the first, and another false break to the downside, which is lower than the first and the second. So to my mind, when that happens, the range, and you could use the horizontal range, or you could use the channel that I'm looking at, will be broken to the high side. So what I'm actually looking for is a break here. And how far it goes is normally to the next resistance level. So that's what I'm looking for. You probably get a little bit of this in there and then up to there if this actually plays out. Am I early? Maybe I am. Maybe I am. But to my mind, again, we've got a double bottom sitting here and we've got a higher low, potential higher low. It's not absolutely spot on at the moment. The one thing that concerns me is that we've closed below the trade line here. But I'm encouraged by the fact that I've got a whole stack of slingshot candle patterns telling me that something's going to happen. There's one there, or the whole one. Let me include the whole one. There's another one there. There's another one there. and there's another one there. So I'm just getting signal after signal after signal, not telling me that the market's going that way, but telling me that if the market does go that way, it's going to break this level and it's going to go out to that side. And that concludes my bias. So everything's telling me that if it goes long, it's going to go long, long. So that's why I'm happy to take that position on CAD yen. Now, there are others. There are absolutely others today. And believe it or not, I'm pretty keen on the prospects of dollar yen. And I hate dollar yen. I think it's just the most incredible currency pair to trade. And I can't understand it, right? Normally, if you can't understand something, you steer away from it. And I do that every time I get the SH12s with it, I steer away from it. But today, here's what I see. So daily charts is undeniably and unequivocally short. You know, the trend is just so clear you can't deny that. What I can see, however, is the potential for this to turn around. And if I go to the 4-hour chart, once again, I'm getting signal after signal after signal that this can possibly turn around. The one thing the Fed has done, of course, has dragged this market way down to not the level that I consider to be the line in the sand. The line in the sand is here. And if you go to the weekly chart, you can see that horizontal level there is still holding. And despite the fact that the Fed, not that the Fed, because I disagree with the reaction to the Fed. I think the reaction to the Fed was overcooked, and that's normally the case. So I'm expecting that will not be followed through today. Rather, we'll probably get a little bit of reverse price action. So when I look at this chart on the daily, I see potential for this to be base double bottom on a support level, and I'm seeing the potential for this to be a higher low. It's not there yet, of course, and if I'm wrong, then the market will just continue to either challenge that low or go through it. And if that's the case, who cares? I won't be taken into a trade. If I go down to a smaller time frame, which I did before, I've got a clear, in my mind, double bottom anyway, and here may be the higher low. Those of you who understand the sentiment cycle will probably see something in this as well, and maybe this is an inversion point on a 4-hour chart. Not sure the sentiment cycle is so great on a 4-hour chart, to be fair, but if that's the case, then this is the potential long for me. And like I say, if momentum carries through, because we haven't really had a reaction from London yet on the Fed news, and of course we've got the ECB and the BOE coming up as well in a couple of 4 hours time or something like that. So dollar yen shouldn't be affected too much by the BOE or the ECB. So I am quite keen to see this get into a long position. I haven't traded it. There's a third that I do like. Unfortunately, it's also CAD based, so I would have to aggregate my risk if I actually traded that. That's the gold trade. Let's get rid of that. We don't want to see it at the moment. It's pound CAD. Now, pound CAD's got two problems. One, we've got to wait for the pound news, and two, it's also against the CAD, which I've got exposure to at the moment. I like this. I think this is really cool. And the reason I do is kind of twofold. We're at, to my mind, and have come off a lovely confluence area on the pound versus the CAD. We've got a lovely trade line sitting down here. We've got a reversal bar, let's call it a rejection bar, followed by a lower high. So to my mind, the next move is going to be short. We've got a big reversal bar, on Tuesday. Haven't got an inside bar. If that was an inside bar, I'd be all over this, and I would actually be preferring this to the CAD yen. But we've also got a break of last month's monthly pivot, which was only 2 days ago, recall, and a retest of that in this bar here. To go short underneath that makes perfect sense to me. And again, same theory. If price continues to rally, then I'm not taken into the trade. But if this bar means anything at all, which is a follow-up of that bar and a follow-up of that reversal bar, then I think short underneath here makes perfect sense to me. Where you put your stop loss is arguable. You do have a horizontal level here. You could put it there for a little bit more safety, more conservative. Cow corner is what I call that one. That's where the cowards go. I shouldn't say that. That's not true. It's far more sensible to put your stop loss there, to be honest, than it is to put it there in terms of risk. So that would be my thought process. And I do like this. I really do like this. I've gone with CAD yen as the CAD trade simply because I've got all of those things that I told you before. I've got these three amigos here. I've got all of those slingshot candle patterns agreeing with me, and I think that's the way to go. If I can get triggered on that and get safe in the market. In fact, this morning what I was looking to do was find a better entry on the 4-hour chart. Let me get rid of that line because it just gets in the way. If I could get long here on the 4-hour chart and get safe in the market prior to my entry here, I would definitely look to place an order short pound CAD based on what I was just talking about. I've got a few more to look at. Actually, Ash has disappeared. No, he's still in the room. Here he is. I'll bring him in because I know he wants to tell me all about why, or not so much why, I understand why, what we can expect from London session with regard to what the Fed's done. I don't think we're going to see too much in regards to the pound or the euro because we've got that news coming up. But what do you think, mate? What do you think of the reaction?
I agree with you, mate. I thought it was overcooked. I don't know if we really did see a very obvious display of algo trading. It was what I heard and what the market picked up on were two completely different things, which always makes me a little bit nervous. And it was a really extreme reaction. After he basically said disinflation, there is evidence for disinflation. Well, we know that already. I mean, it's there has been evidence. Yeah, I mean, we've seen CPIs coming down. We've seen core CPI, PPI. We've seen PMIs, starting to ease back a little bit. So we know there's disinflation. So for the market to react off that, I thought was quite strange because what Jerome Powell also said was that he didn't see the interest rate coming down at any point this year, but the market didn't pick up on that. So I don't know how these people decide to program what they're programming, but they certainly seem to be all out. It doesn't really matter what he says. We are going long. We just need the slightest hint that we can push the button on that. So yeah, I was quite surprised, mate. It does suggest a fade will come into play, but given
just a fade, you're not suggesting that it was completely wrong because it's probably gone with trend at the end of the day.
Yes, it has. Yeah, the market did go with trend, you're absolutely right. But yeah, I would have thought just a bit of a fade. I mean, there's no, because of what the market picked up on and held it. I mean, this is the thing. It was, the market had plenty of time after the meeting to sell the rally and take the profit and give us a blow off top, and it didn't do that. It held firm, and I suspect we're probably going to get a relatively quiet session up until the ECB. The BOE actually is out in a couple of hours, so I think it's probably going to be a relatively quiet session until then. But the market had a chance to fade the rally, and it didn't. It held and it gapped a little bit more this morning. I can see, and it's even held where the gap is. So it does suggest that the market is overcooked, and a move back to the downside is.
Stand by. There could be an order. Oh, we've got 15 minutes to go. This is a setup. to trade the euro short. So I'll keep you posted on that. If that stays as it is.
I guess, everything sort of like points us towards a dollar long when it comes down to where price is. And it's really just waiting on what is going to be the driver for the dollar to actually sort of push it back up again. Because, I mean, that bar, that's yesterday's bar. And look how late that was in the day. What's this? Is a 30-minute chart, isn't it?
Yep. 30 minutes.
Yeah, that was so over a 30-minute time horizon and probably shorter. The euro and all other assets just rocketed. They just there was this lift off.
There's the rate announcement. There's the statement.
Yes. Yeah. I mean, it proved to be sort of a little bit of a difficult one to grab, but when you see this lift off like we've seen, it doesn't take a whole bunch to kind of push it in the opposite direction. Now, this may well be on euro dollar, it might be the ECB, but assets right across the board look like this. Risk assets right across the board look like this. So there's not going to be much to touch it in the opposite direction. But it might well be that we're waiting for a couple of weeks. This may hold here until the 14th of February when we get the next CPI inflation print. And then we start to ease, or it might even ease into that number. It just seems a bit tricky to imagine, or it seems difficult to imagine that inflation goes from 2% up to north of 10%, down to 2% in such a swift seesaw action, even with Fed policy, even with interest rate policy right across the globe. But I suppose it could happen if you sort of count in the some of the issues that kind of brought inflation, and one of those main issues was the supply bottlenecks. The supply bottlenecks, and of course with China opening up, that has eased that a little bit. And things in Russia, in Ukraine, have gone a little bit more quiet, strange, but. It just seems like things are playing into the market's narrative right now. But things are still, things are still very frothy. We're seeing Microsoft, Apple, Amazon, Google, all of them cutting back on labor force, and yet we still see an unemployment rate in America at 3.5%, which is maybe 3.6%, but it's still in the low band. So we're not really kind of like getting the data as yet that seems to be waiting in the wings to come through. The other thing that Jerome Powell said, which the market seemed to really like, was the soft landing. But all I heard him really say was it means the soft landing, the possibility of the soft landing is still there. He didn't say it was high. In fact, he said it was quite low, but he said that the possibility of the soft landing is still there, and the market like that as well. And it did seem yesterday that it doesn't matter what you say, you are going to be cutting interest rates in a few months' time, so we're buying. And just give us a word or give us a sentence that allows us to buy and explain that to the boss, and we'll do it. And that seems to be what's happened. So now we're looking for the next data point, which suggests that maybe the market's got it wrong. That the CPI numbers are on the 14th of February. There's others in between now and then that could push the market, but it really is that now the numbers really do become the finer point of detail. And if the inflation velocity back to the downside again, back to 2%, slows, then I think the market gets spooked. But until then, you'd have to assume that it's going to probably hold where it is. I'm looking at the.
Well, at the end of the day, you've got people who have, I'll say suffer under the last, what is it? Are we up to 12 months now of bear market? I think we probably are.
Yeah.
And they're looking for a bottom, right?
Yeah.
So any news that kind of agrees with the bottom, or suggests that there's a bottom, they're going to buy it.
Yeah.
Now that may be at their peril, but they're going to do it anyway. It's as simple as that. Well, but picking the bottom has always been a very, very tenuous scenario. So
I guess you're absolutely right. Yeah, it is, and I suppose there was probably enough nervousness and enough pain in November, December for people to say, fine, now's the time that we take the risk. This is really good value. And we will see if we can buy the bottom, and they've got one of sorts. Whether it is the bottom is the big question.
Well, so far they're right. Yeah.
So far they're absolutely right. Yeah, and you have to question what's going to make them wrong if they are quite happy to buy off high inflation, high interest rate scenario, and not be too concerned with some of the other aspects, that are forming. I'm going to share my chart, mate. I'm just trying to get Zoom on. I've had to flip computers today because my microphone.
If that trade stays as, or if that scenario stays as is, I'll call you in on that euro dollar trade.
Yeah, sure. We'll check out all that
stuff.
Well,
it's 10 minutes away, so.
This is the Nasdaq, and the Nasdaq is just. It's just lift off. And if you go to the same time frame that you were looking at, this is the FOMC, and this is the lift off. And when Jerome Powell's statements started to come in, that's what happened. We got a gap up this morning, which has now been closed, and it's got a green light to go, and would suggest that the next possible area that we would see a reverse is around about here, which does kind of push me towards thinking, okay, well, we're probably, we're definitely going to be data dependent. We're going to be waiting for that data. The other one that is obviously in the other line in the sand is here, and I would suggest that is the ultimate. And why I think that is the ultimate is because it would start to possibly then be able to create some sort of bottoming pattern if it comes up and then back again. From here, if it comes up and then back again, we might see an inverted head and shoulders start to form off the back of that there. So I think that there's probably further to go to the upside, and at this particular stage, it looks like that's going to happen. But this area here has got to be something that market participants are waiting for to see if they can buy into it. Because during a Fed speech, yes, you're going to get a lot of traders that manage to get into the market, but there's going to be a lot left on the sidelines because they're just not, investors left on the sidelines because they're not able to get in. So now they're waiting for the pullback. And if they're waiting for the pullback, that would also suggest that the buyers at some point, regardless of whether they think the market is bullish, there won't necessarily be any more buyers to buy the market as it continues to push higher without a retest. So that's why I would suggest a fade is probably in the wings, and it might be this area here or it might be this area here. It's difficult to know. But I do think we test this area at some point, and when we test that area, we can see what the drivers are and what the data is at that point. I suppose if it's mid-year and we can test that area, that would suggest a decent point to start buying up, because even though the Fed may not loosen policy, in the tail end of this year, we would be then looking at next year if we sort of like if we get an opportunity this year. But the Nasdaq's up about 15% already this year. It's already it's already on the move and already putting in a pretty stellar performance. Gave
some absolutely beautiful signals too, if you were awake to them. But if you didn't see them, then you're not in. But there was a really, really nice one there a couple of weeks ago. Yeah.
Well, this is the daily, and this is the other test that we've had here. And this one here. So Nasdaq's on its way. Gold is another one that is obviously of huge interest, because this is also now starting to look pretty close to overcooked. This looks like the area it might turn around. It could well be where we are, but we're in the band up here of gold coming back. And when you see this kind of price action without a retest, this is where you kind of like you hear the gold bulls say, now this one's not coming, but it's not going to happen this time. Well, it always does. So at some point, this one is going to start turning around and flowing back down again as well. So it's an interesting dynamic. Inflation stays sticky, and gold probably will continue to the upside, but it would probably push the equities a little bit lower, and the flip of that could change both of these. Silver just hasn't moved.
Sorry, before you go, on gold, I mean, it's played out perfectly to the seasonal trade that everyone knows is there, right?
Yeah.
So the question begs the question for me: when does that season end?
Mid-Feb.
Mid-Feb, right? So if we're not above the highs, then probably a nice idea to start looking for shorts around about mid-Feb.
Yeah, I would say the last week of February is when you'd be when you'd be looking to fade gold. But yeah, I mean, and it's the same with the stock market as well. You know, the stock market also has a seasonal bias, which takes us up to in mid-Feb, and the reason that mid-Feb, as I say, is really interesting, and obviously these things have to coincide with each other, but you know they have to kind of meet. If they don't, then it doesn't really matter what the date is, but you can see this here. If we start looking at what do we have around about the middle of February, and this is going to be really important now. We really are keen on looking at where the data is going. If we put in for next week and up to, let's put in for a couple of weeks. And we'll put in the dollar as well, just to kind of get a feel. We don't need to look for all this other stuff here, but we'll take all this away as well. So we just have a look. So these are going to be the key aspects from the United States. Look at this, mid-Feb, February the 16th, core PPI and the PPIs. But before that, it's going to be the 14th. So on Valentine's Day, core CPI from the United States, and we've seen it down to 5.7%. So that's where we currently are, and the expectation right now is we stay there. So we are under the 7% mark. If this starts to push up, which it could, there's obviously been some kind of reaction to what the Fed's done, but unless the jobs data changes, then it does leave inflation a little bit more fixed. So I'm not sure whether that will change things around, but that's a really important day. And then going back, that's pretty much all there is. When you look at the data, that looks to be the most important metric that we are next going to get, and that's Tuesday, the 14th of February. So we're looking at nearly 2 weeks away.
It's Valentine's Day, right?
It's Valentine's Day. It's Valentine's Day. Yeah. So I guess what I'm trying to say is, if you fight the move that we've had in the stock market, and probably gold and silver as well, until we get something which substantiates the theory that this could turn around, then you could be pretty frustrated for quite a while. This is the dollar index currently at 170. 100 is going to be a level, because it's the number. It's the round number. There is some support down here as well. We changed this onto on a monthly. You might see it a little bit clearer. Look at this here. So looks like we've got a little bit further to go before that 100 kind of gets seen. But again, astonishing moves, mate. The move to the upside was faded aggressively because it was so parabolic, and you'd have to expect this to have the same sort of thing. You'd have to expect another move back up again to at least retest some levels. Possibly here, it looks like the most obvious, and maybe a little bit higher. So looking for dollar longs, looking for NASDAQ short, looking for gold short, looking for silver short is on the radar. But I can't just go straight in, and I don't think
there's no evidence to suggest you should do it. Yes, that's right.
Yeah. You can't
and
just
we
go
spoke
straight
about this
on
Monday, and I think last week, where we would, really common sense tells you there's going to be a cessation to this. I won't call it manic, but sustained sell-off. Yet, where's the evidence to suggest that's going to happen? And we're probably through that support level as well. Yeah. So we've got to get back above that support level. Yeah.
Yeah, exactly. And I think that's the point, is that, a sustained sell-off or a sustained rally in the dollar, if you want to see it this way instead, a sustained rally is probably going to be there. But as you say, when the Fed were coming out yesterday, it was all before they even talked. It was difficult to figure out what they were going to say that would help the market. I was on the side to look for dollar longs because that's where the value is. But in the back of my mind, I was like, well, they probably won't say anything. So it's a very dangerous trade. And I did actually suggest a potential hedge between, dollar Swiss long and dollar Swiss long and Aussie dollar short. I think it was that way around.
I'll just place this order. I'll place this order, mate.
Oh yeah, go for it. Let's have a look. So we got euro dollar short, right?
Euro dollar shorts. I'll give you the levels.
I'll pass you back the screen.
It should be there now. So we're simply trading the bar, the buyer bar. And what we're playing is a false break of that resistance trade line and the potential for an untested daily pivot to be tested. So we're going short at, I can actually place it. I didn't like that. Invalid TP1. Okay. Yeah, it's placed it. TP1. So I have to amend it. Anyway, the entry level is at 1.0993. That actually doesn't ring a bell. Let me just check that. That's right. 1.0993. What I'm going to enter at, and the stop loss is going to be at 1.10. 11, 1.1011. I think that's right. Yep, that's right. 1.1011. Now I'm going to take my first profit because it's in my rule book, my golden rule book, not to trade through the low of the day. And the low of the day looks to be that bar there, which is at 1.09848. I'm going to call that 1.0985. So that's where I'll take my first profit. I'll get myself safe there and take 50% off. Move my stop loss. What's it going to be? 8.5 from 9.3 is 8 pips. So I'm going to move my stop loss 8 pips above my entry, meaning that if I hit that level, 50% off, stop loss 8 pips above entry. The worst thing that can happen is we'll be taken out at break even. Target is pretty clear. It's the daily pivot. I won't take it at the daily pivot. I'll take it above the daily pivot. Daily pivot's at 109.47, so we'll go at 1.0950. That'll be the target. Now I've got to modify this to get TP1 right. I don't know what I did wrong in the first place. Enable TP1, 109.85. That's exactly right, isn't it? Yep. 1.0985. Decimal point in the wrong place. Got it. And 8 pips is good. TP2 is disabled. That's good. Target. That's going to be let's say 42 pips. I think that works out roughly right. There we go. So these TP1, or there's my TP1, there's my target, and the trade is as simple as that. Daily pivot test based on a false break of that resistance trade line. Right, mate, that's me. Thanks.
Right, brilliant stuff, mate. Yeah. It's interesting, actually. I mean, I'll be interested to know if anybody's trading through this as well, and how they're approaching the market, because it is a bit more difficult. And the other thing I find quite interesting about the current period we're in is that if at some point central banks kind of normalize their position and don't go further into rate cycles, and we kind of get a more gradual move with some of these central banks. So, if we're thinking about where the Fed is right now, Fed's now sitting at 4.5% on the interest rate, so they're not that far away from where they're sorry, 4.75%. They're not that far away from where they want to be. They said 5%, and they've got maybe a one more rate hike, which I suppose is why the market's so keen. ECB sitting at 2.5. They're likely to go 50 basis points today, so they'll be 3 at 3%. The BOE's at 3.5%. They'll probably go to 4 today, so they're not that far away as well. I don't know if they're all going to go to 5, but if 5 becomes the sort of benchmark area, then there's going to be a point where things start to slow down. You know, that they don't raise interest rates quite as aggressively, which we've already seen from some central banks, already seen it from the Fed, already seen it from the Aussie, already seen it from the RBA, and we've already seen it from the BOC as well. And of course, the BOJ they're not doing anything. So at some point, you would expect this market's dynamic to change quite a lot, where we had sustained rallies, on longer term timeframes for a long period of time. That seems to me that, within 6 months, that particular approach is probably cooked. It's probably done. And then we get into this range situation, which if you think about the range, the trend being the road to the next range, similar to central bank policy in some respects, mate, where you get these extremes because you get this policy reaction, and that kind of creates a trend of policy, rate hike. Then it slows down, and you get into this range, which is the most normal sort of scenario, where they stay where they are for many and many years. And then
it's one of the first things I was taught, right? After a big rally or a big sell-off, you're going to get consolidation, whether that's on a 5-minute time frame or a 5-month time frame. It's just the golden rule, isn't it? At the end of the day, so that's what you would expect today. For sure. But I'm actually talking about for the rest of the year. I'm not just talking about today. I'm talking about as we kind of move forward. There's going to be a point where things just get kind of like, more into balance again. And when the balance kind of like sits for a while, then the moves in the market will be I think they're still very noisy. So what we saw yesterday was very noisy because it was a kind of daily, explosion, but maybe not sustained periods of trend. When I think about the NASDAQ, I think that the NASDAQ may well actually be in a bit of a band. We may not see a big move in the NASDAQ, which just continues to, if we consider what we were seeing previously with equities, global equities, and I'm just going to bring my chart back in. What we saw with global equities prior was a period where we saw this, since 2020, just up. Then we see this down. Now, I think at one point we might well get into a situation where it just kind of goes back and forth for a while. It does sort of like it stays in a wide range. I hope so. That'll provide me with some wonderful trading opportunities.
Yeah, But I wonder whether this is going to be the case across the board, mate, because, as I say, central banks are on the move at this stage, but at some point they won't be on the move anymore. We got very, very used to 0% interest rates, and everybody sort of, seems to be trading as if we are firstly still in that phase, and secondly, if we're not in that phase, that we're going to be back to that phase pretty soon. But those times they've got to end eventually, because otherwise you are always going to get these points of hyperinflation and not hyperinflation, but extreme inflation and back to disinflation, because all it takes is just a little shock in the globe and things push again. But if we think about the drivers this time round, yes, it was all caused by central banks overprinting, but COVID really did exacerbate because they had to overprint again. So they were already overprinting. Then they went
supply chain stopped, prices went up.
Yeah,
blah 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 blah.
Yeah, and they're still testing these viruses out there. It only takes another situation where something else gets out into the world, whether by nefarious means because it's pre-planned, or whether it is a genuine accident, and we're back to panic again. And I just wonder whether we might be in a bit of an odd phase right now, where the market is expecting one thing, but it's not going to get it. Maybe growth is not where it was before. Maybe we don't have this chance to just elevate the stock market another 50% higher. Because things have changed again.
Well, certainly we don't at the moment, because inflation and low wages have taken care of that. The fact that there's no longer money being handed out left, right, and centre by governments around the world is now putting pressure on budgets, right? And I mean household budgets. So the disposable income just isn't there anymore. It's certainly not there at the moment.
No.
And the longer this inflationary trend and low wages, and you're experiencing in the UK, where you've got strikes from the medical professions and everybody left, right, and centre wanting more wages, right? I mean, that's a cycle. And the more that they say, okay, you can have more money, then the more inflation is fueled. And it's a tiger chasing its tail at the end of the day.
It is, so, and actually, that they cause this problem because if the nurses and it doesn't matter what sector you talk about, really, they say we want more wages, and they go, no, we're not going to pay you more wages because we're just going to get workers from here. So we can't go and get workers from there because we've left the European Union. So we're going to have to pay you more wages. So they've caused the problem. Governments and I don't think you could even put this one at the central bank in the UK this time around. Yes, they did print money. But the government and Rishi Sunak particularly were very keen to introduce the furlough scheme in the way they did. And I was talking to my friend about this the other day, and he was sort of saying that that people are going through lots of hardship, and people should get more wages and whatever else. And I said, well, you may well be right, and of course that the government did cause a lot of this, but we've had an election since. And people are very short. They've got very short memories. They're complaining now about the government, but only 6 months ago, that they could have actually moved to get them out, and they didn't. So I don't know, sort of like where the complaints sometimes come in. I don't know how people can complain about a government when they do really what they have to do. Don't get me wrong. I'm no sort of government supporter, but there has to be some pain. Because if we don't get that pain, the future is even more tenuous. You can't continue to print money and print money and print money and basically devalue your own currency forever and ever and ever, because it actually makes a mockery out of what a currency is. At some
point, the whole world's been doing it.
Yeah.
Or the whole developed world's been doing it for the last, I don't know, since the GFC basically, but certainly in the last three or 4 years, with all this quantitative easing stuff.
Since the financial crash in 2009 is really when we sort of, that's when it all started.
Yeah, and we've learned nothing from it because we're just going down the same path. Well, it's a different path, but it's the same result.
Yeah.
And
they're talking about raising the debt ceiling again in the States, so they're looking to spend.
Yeah, come on, seriously.
You just got to.
Have they got any brains at all? And I think the answer to that is no. And
well, it's all short-termism, isn't it, mate?
Apologies to any Americans that are in the room, but I think you'd probably agree with me. I mean, I sit there and watch the news, and you've got 5 black policemen right now.
Yeah.
Who flogged a black guy to death.
Yeah.
What the hell?
Well,
what's wrong with that society?
I have to say.
I don't know why I brought that up and how it's relevant to anything, but to me, that place is in just such a shambles, man. I can't believe it.
Yeah, I think the States is. I mean, I'd like to think that the UK is a bit cleaner than that, but it is only a bit cleaner. We do get sort of stories, not quite as extreme, but we do get sort of stories of just bad characters. People that are just bad characters. But this is where you sort of look at policy and you wonder, when is somebody gonna basically say you're gonna have to suck it up? You are going to have to suck it up. The problem is when people are sucking it up, and this is where the injustice comes, even though we do need to suck it up and we need to get things sorted out financially and in the monetary system, the people that implement it around the back doing deals with their billionaire buddies, and this is where the whole sort of spiral thing, you know, this is where everything gets out of control. You just want an honest person, an honest politician to kind of come in and say, look, this is what is going to happen, and we're going to have to do it, and be clean and be a good character, and you know, not be weak in their personality. Shell's profits today.
You know what you're talking, don't you? You know the obvious solution, because it's all of that stuff you're talking about is based on graft and corruption. You're talking blockchain.
Yeah, absolutely, and this is where the crypto situation becomes really interesting, but also very, very dangerous for governments, because and you know, this is where things might moving towards. I don't know whether it be in this decade or the next one, but people could effectively control their own future by, as you say, using blockchain and using cryptocurrencies, using decentralized cryptocurrencies like Cardano. I mean, actually, there's not that many that are decentralized fully. You know, they're all owned by some entity. They've all got some entity kind of like at the top of it, as much as they may claim to be decentralized. But yeah, Bitcoin, you can't. What can you do? You can't mess with that thing, because nobody really knows who created it. And that person's well long and gone anyway. So, you know, they're not controlling it. And yeah, you're absolutely right, mate. There's enough things out there that may well force the system to change. But you do sort of pray for just some integrity in government. But it's not going to happen. I was just seeing this line here.
I mean, hang on. I'll look out the window. I can see Alison putting saddles on the pigs.
Yeah. Let's just
they're ready to take off.
This is a line that looks like it could be in the sand for the Nasdaq. Now, the reason I'm interested in the Nasdaq is that I think there is a shortcoming, because I think that, you know, with the Nasdaq, it's probably the one market which is going to be more subject to the changes in inflation and central banks. So I think it's a good market to try and trade for the volatility. So I'm looking at the Nasdaq with some interest. Looks like there's a little trend line that may well be in play here, which does coincide really well with this this horizontal level, which is you know, potentially tomorrow or maybe sometime next week. We could start to see this horizontal level tested and come back a little bit. But look at the Nasdaq go again, mate. It's well and truly on its way, and it has been. You know, bang there. Big move there, big move there. If any Elliott Waves theorists were in the room, I'd be interested to know what they make of this, because there's probably some Elliott Waves theory going in there. You were right about the sentiment cycle as well. It looks like this is a little bit of an aversion point, and then we looks like we're starting to take off. Might sort of see a little bit of wall of worry, so that would suggest maybe something coming down again. But the Nasdaq I find really interesting. It's a really interesting chart because there's movement. You compare this to the FTSE. FTSE's just doesn't really know what it's doing at the minute. You know, it's kind of
and silver's the same. I think you were going to the silver chart earlier.
Same. Yeah,
it's just log jammed, isn't it?
Yeah,
but
absolutely.
That's sensational, because if I could just have a few hours to spend on a short-term time frame, I reckon there's some marvelous opportunities in there to trade that range.
Yeah, I think you're right, mate. Well, it does come down, it goes up, it comes down. I've been in enough shorts on this one to know how frustrating it is. You know, yeah. I mean, the only good thing, and this is when we were talking on Monday or Tuesday, and I was saying to you, I was in a short on silver then, and it was quite nicely up. And I said to you, I meant to hold this, but my personality says I won't be able to. So I was fortunate enough in that case to have a personality which doesn't let me hold it. But really, you know, this is something that you could try and hold on to and get down here, but you're going to go through so much frustration because it just doesn't know which way to go right now. recession and a diminishing growth picture would suggest a cutback in silver and copper as well. And maybe the FTSE. We are seeing a little bit of an easing down with copper. Maybe a better one to look at this particular stage. But you look at copper, that would suggest maybe it's also not really sure what's going on, but that maybe an easing down. Oil as well is coming back down again, and I suppose with a slightly different global picture now, it would suggest that oil would struggle a little bit. And I never liked
actually, if you wouldn't mind extrapolating on that, I've got your trend line and I've got a channel there as well. It's the bottom of the channel. Yeah. It's getting to a buy point, in my opinion. Is that possible?
Yeah, it is possible. The inventories really in the States have been actually quite negative for oil recently. But we don't really, there's still these kind of there's still this Ukraine situation going on, and the news has been very quiet. I was interested this morning to hear some, they had all bullish people on this morning on Bloomberg because the market's moved. So it's no good for them to sort of like get negativity.
After the news experts, yeah.
Yeah, same with the stuff in the Ukraine. We're not really hearing that much. So, and certainly on the business side of it, they're not really reporting on it very much. So, yeah, I still think that there is a possible supply issue and that the oil could start to move higher. I think it's close, if I'm honest, mate, but I'm not sure whether it's there.
It's a nice support level where it is.
Yeah, I mean, this is on the longer term timeframes, which suggests that it actually could come a little bit lower. If you look along here, it would suggest that this is a potential for a head and shoulders on a weekly in it, and it would suggest it could come down just a little bit more down to around about the.
See that level exactly where price is. If you draw a line across there, it's a decent level. Exactly where price is.
From here.
Horizontal level, yeah.
Oh, I see. Yeah. Yeah, does look pretty good, doesn't it?
Mm.
Yeah, you're right. Actually, I mean, it's in and around. There's touches here, and yeah, we are right on top of it. It could be, or it might well be a little bit lower down here. And it's similar with oil. One thing I would say about oil is that at least the move to the downside has been a lot more gentle. It doesn't look like it needs to go and test anything. You look at the dollar and it looks like it's got to test something, and gold. But oil doesn't really need to test anything. Oil could quite happily creep its way down now and not look like a strange, over volatile, excitable market.
Yeah, a bit of a bear flag sitting there, I suppose. It's on trend. Yeah, it's tough to trade. It's tough.
Yeah, there's nothing just yet. There's nothing just yet when it comes down to oil, which would suggest we got the OPEC meetings were due. I thought that was this week. I mean, they're going to say something I would have thought quite bullish, but whether the market believes them, I don't know. But yeah, as I say, mate, Shell posted unbelievable profits today.
Oh, okay. Yeah.
So yeah, they've done extremely well.
Is that when you say profits? Is that year on year? I imagine.
Yeah, but highest in 115 years. The profits. Yeah.
Okay.
And nearly $40 billion worth of profit, I think, in a year.
Yeah. Okay. Suggests to me that oil prices are above where they need to be. Gasoline prices are above where they need to be.
Yeah, the 40 billion would have been made up. A big chunk of that would have been made up by the last year's move in oil when it was at $120 a barrel. So they would have a lot of those profits next year may not be quite as keen, but certainly the ones for this year were extremely high. And Shell is up 2% on the day. Interesting, BP's down actually nearly 1%. So they're not. So they haven't posted their profits as yet.
Okay,
cool. But I don't really have I don't really have any trade suggestions this morning, mate. The Nasdaq, as I say, will probably keep going. Don't see why it wouldn't. But I would be interested in shorting it here. I'm interested in getting short on the Nasdaq in around about 100 pips. So it's around about 0.75%. If it moves another 0.75%, then I'm interested in shorting the Nasdaq.
Okay, cool. I've got a few things that I haven't mentioned yet. I think I mentioned pound CAD. I know you know about CAD yen, you know about dollar yen. There's a couple of things other than that. The euro is not performing very, very nicely at the moment, tipped in by the barest possible margin and just retraced off that instantly. Don't like that, but anyway, is what it is. I'll share my screen.
Yeah, great stuff.
Okay, as I said, tipped in by the barest possible margin and now retracing instantly. Hate that when that happens, but it is what it is. We'll continue to watch that. The gold hasn't yet triggered, waiting on that to break out. Pound CAD I spoke about. I think that's a very, very good opportunity to trade short underneath there. Stop loss there, or there, take your pick, whatever you feel safe with. I'm looking for that on a smaller time frame, as I am dollar yen, and we'll investigate that in just a tick. The problem with pound CAD, of course, is we've got news coming up, and if you're not already in, it makes it very, very tough to get into the market based on, pardon me, current price action, because current price action is probably speculative, and they're speculating as to what may happen when the news comes out. So that makes it very, very tough to get into the market. If you want to take a leaf, I guess, out of trading news from yesterday, generally, unless something untoward comes out, the market just goes to trend anyway. So the trend on this one, for my money at the moment, is questionable. Is this a retracement on? Hang on, I'll get there. There we go. Is this a retracement on a bigger retracement on the uptrend? Look, to my mind, I don't think so, because at the end of the day, you've got a key reverse. Well, it's not a key reversal because it wasn't higher, but it's a reversal bar followed by a lower high. And that's why I'm keen to get into it. And if you look at the bigger picture, we are coming off a resistance level, both horizontal and trade line. There's the reversal bar. There's the potential lower high. So I think the best course of action for me is short here. And I'm so tempted to get into this just at market and trade it short, but I don't do that before news. So in fact, I don't trade at market very often at all. In fact, I don't trade at market. Let me make that perfectly clear. So if I miss this, I'm going to be sorely disappointed, but at least I've stuck to my guns, and that's kind of where I'm at. Those of you who are interested in trading the breakouts of, what is it, FOMC, we had a range yesterday, which was in here. And I said to all those who listen that I wouldn't trade it if the FOMC news was close to the top or the bottom of the range. And that's exactly what happened. We're right at the top of the range when the news came out. That means to me that no, we don't trade it. That turned out to be, I won't say a wrong move. Again, I'm trading within my regulations or rules. But the breakout sometimes works. If you are there, I'd much prefer it to be in the middle. So that one was a miss. What else have we had bad luck on this week? Not so much CAD yen because we haven't been triggered into that. Dollar yen we've spoken about. Can we get into dollar yen? Let me investigate that just a little bit further. So dollar yen, we just looked at the NASDAQ chart, right? The NASDAQ chart looks so similar to this that it's not funny. And that's not surprising because it's the dollar base at the end of the day. That's the primary currency. I could have traded that bar if it wasn't for the daily pivots. I've got all these rules that prevent me from trading, and that's one of them. The way I can get into this on the 4-hour chart is price gets back above this level here and then retests it. Then I can look to trade it long. Looks to me like we've got a double bottom here and we've got a higher low. It also looks to me like we've got a market structure that agrees with me. Not that I'm a proponent of, if I've got an ascending triangle, I have to trade it long, but it's a market structure. And if that market structure breaks down, okay, it's been broken, we've had a breakthrough. If we get a reversal of that, then the opposite direction takes over. The other thing that makes me a little bit on the attack side on this one, and if I wasn't in CAD yen long, I would certainly be very seriously considering this, is I've got on the 4-hour chart everything that works for me. And what works for me is candle patterns. So I've got a high test bar here, I've got a high test bar here, I've got a third high test bar, it's a very small candle sitting there. Okay, sorry, wrong trade line. High test bar there, high test bar there, high test bar there and there. So that tells me that if price comes back to this level, it's going to explode in that direction. I've got a candle pattern here that I like. I've got another one that follows it directly, and then I've got a third one that follows it directly. So I can't ignore that. The only thing that would stop me trying to get long here is if price took these lows out, and it hasn't done that. And in effect, I've got double bottom, higher low. So I'm looking to find an entry here at some stage. It's not there just yet because I can't trade into the daily pivot untested. I've got to get above here, retest it, and then I'm long. But I'm super keen to do that, mate. I think if that sets up, that's probably going to be my trade of maybe even the month, because I think if it does reverse, then we're probably potentially back here.
Yeah.
I mean, we'll see. Obviously, a lot can happen in the meantime, including NFP, which is coming up tomorrow. But, gee, I'm really keen to get back into, and I'm a hater of the US dollar, as you know, but I can totally see this potential to retrace the retracement, if you like, I'll put it that way, and come back to a decent level. That's kind of my thought process, and I think that's available on quite a few things: euro dollar, pound dollar, or not so much pound dollar. I don't trust it so much, but Aussie dollar, Kiwi dollar. I think they're all potentially going to suffer at the hands of a strong dollar in the next week or so.
Yeah,
that's kind of where I'm at. And that's going to bring your NASDAQ down as well, of course.
Yeah, absolutely. And I'd forgotten about NFP. I was looking at the average earnings, but of course, NFP is a driver, and we got some ISM as well. So there are a couple of things that could start this move in the opposite direction before that CPI data. I suspect that's the biggest one, but yeah, fading the rally may well start by the turn of the day today. I would like to see it at that level. It's just gone up another 1% as the show started. So it needs another push. And if it does get to that push, then as I say, mate, I am going to be taking positions on the short side for the NASDAQ.
Happy days. So we're pretty much on the same page, I would think.
Yeah.
At this point, of course, if the market says that the reaction to the Fed is valid, then I think we're going to be sitting here waiting for quite some time.
I think you're right, and I think that's the key. You know, right now it's just sort of waiting for the price points to come in or the messaging to come in. Just because when the market's moving like this, it's just not very wise. If you're in a position, brilliant. But if you're not in a position, it's not very wise to try and trade against the trend, which is moving higher, or trying to jump onto the trend, because it's you may well make money this time, but it tends to be quite bad practice, because you never know when the motive moves are just going to turn around and churn you out. So you know, this is not a market to be trading today, in my opinion. It's just it's better to wait. Maybe till tomorrow, maybe till the US session. I'm not sure, but at this particular stage, there's still a hangover from a big emotive situation that happened yesterday. And until that clears and they start focusing on the next thing, then this market is just it's just not that safe, in my opinion.
Yep, that's why I'm trading at 0.25%. Right, it's not worth the full Monty at the moment. Yeah, agreed. Agreed. But that said, I'll still trade my setups, and if I've got a setup, which I do, I'll trade it. And
same. I think
I need some help at the moment.
Yeah, well, I mean, if the Nasdaq shapes up and I get in, I'm not waiting either. But because I've got a price point, as you say, you know, if you, I guess it's it's more the point that people shouldn't just trade off what they think right now. But, you know, if your setups are there, then,
or if ever,
if ever, but even more dangerous possibly. But anyway, mate, we better push off. I haven't got any questions, because I don't know whether they're going to you or not, but I've got no questions.
No, I haven't got in my little inbox either. Actually, you're very quiet, you guys out there. You must be absolutely stunned by what's happened overnight.
Yeah.
No, or not.
No questions, no trade ideas. Not sure where everybody's at. But we will come back on Monday and see if you know, things have changed at all in the market, and see
it's ROG Monday.
Rob Monday.
ROG, R-O-G.
ROG.
ROG. I'll give you 30 seconds to work that out.
ROG. ROG. Return of George.
Yay! Excellent. Well done. There's a bonus for you. I'll send you a bottle of champagne in the mail, mate.
Oh, look forward to that, buddy.
No, I'll bring it over. I'll bring it over. That'll be worse.
Oh, mate. I'll be drunk by the time we get here. So have a lovely weekend, mate, and to everyone else, have a lovely weekend as well. Thanks as always for joining Jeff and I, and we hope that the market is being kind to you. And if you've got any questions, it doesn't matter how silly you think the question might be. We will go through it, you know, to the best of our abilities, and see if we can maybe get some clarity if you're a little bit lost. If you're not and you've got some really good trade ideas, then share it with the crowd, because you know, we might have missed something, and that's the whole point of this show, is to try and share ideas and share knowledge and become better together. But have a lovely weekend, guys. Have a lovely weekend to you, mate, and I will see you next week.
Cheers, mate. 100%. All of what you've said, and then answer to Catherine. As Catherine saying, because I feel we should stay out of this week of the markets, given all the news, I don't know how to play them. Now, there's a perfect question you could have asked earlier, Catherine, and we would have said exactly what you've done. Stay out. Awesome. You've done it. Yeah. You've done it well. You've done exactly the right thing. Look forward to seeing you guys next week when we'll do it all again. And it's ROG Day on Monday. Excellent, Ash. That's a really good get. Have a great weekend, buddy. And see you later. Bye-bye for now. Hooroo.